You know what? I almost made the biggest financial mistake of my life last week. I was sitting there, staring at my XRP portfolio, finger hovering over the sell button. The price had been stagnant for months, the crypto Twitter trolls were getting louder, and honestly, I was just tired. Tired of waiting, tired of hoping, tired of being called delusional by people who probably don't even understand what blockchain technology actually does. But then, something happened that changed everything. Something that made me realize I was about to throw away what could be the most valuable asset in my entire portfolio. And it all started with a single message that popped up in my DMs from someone I'd never met before. The message was simple but chilling. Check out what BlackRock is really doing with XRP. You're about to make a huge mistake. Now I get weird messages all the time. Crypto attracts every conspiracy theorist and get-rich-quick schemer on the planet. But something about this one felt different. Maybe it was the timing, maybe it was the way it was written, but I couldn't shake the feeling that I needed to dig deeper. So I did. And what I found absolutely blew my mind. I'm talking about connections between BlackRock and XRP that go so deep, they make the typical Wall Street insider trading scandals look like child's play. I'm talking about a web of former employees, strategic partnerships, and market manipulation that would make your head spin. And the crazy part? It's all hiding in plain sight. But before I get into the bombshell evidence I discovered, let me back up and tell you exactly how this all started. Because the rabbit hole I went down was so deep and so twisted that I'm still processing what it all means. It was a Tuesday night around 11 p.m. I'd been having one of those days where everything felt wrong with my investment strategy. Bitcoin was pumping, Ethereum was making new highs, and XRP was just sitting there like a dead fish. I'd been holding this coin for over 3 years, watching it get beaten down by SEC lawsuits, watching influencers call it a security, watching my friends make fortunes on dog coins while I held on to what everyone was calling yesterday's technology. The doubt was eating at me. Maybe they were right. Maybe XRP really was done for. Maybe I was just another bag holder clinging to false hope while the market moved on without me. That's when I got the DM. And that's when everything changed. The person who messaged me claimed to be a former BlackRock analyst. They said they'd been following my content and respected my research approach. But more importantly, they said they had information about BlackRock's real position on XRP that would shock me. Now, I'm not naive. I know there are scammers everywhere in this space, but this person wasn't trying to sell me anything. They weren't asking for money or promoting some new token. They just wanted to share information. And the information they shared led me down a research path that kept me up for the next 4 nights straight. Here's what I discovered. And I want you to really listen to this, because it's going to change how you think about not just XRP, but about how these massive financial institutions really operate behind the scenes. First, let me tell you about Robert Mitchnick. Most people have never heard this name, but they should have. Mitchnick used to work at Ripple, the company that created XRP. He was there during some of their most crucial development years, working on partnerships with banks and financial institutions around the world. He understood the technology, the use cases, the potential better than almost anyone. But here's where it gets interesting. Mitchnick left Ripple, and guess where he ended up? BlackRock. Not just any position at BlackRock, but as their head of digital asset strategy. Think about that for a second. The world's largest asset manager, with over $10 trillion under management, hired a former Ripple executive to lead their cryptocurrency strategy. Now, you might think this is just a coincidence. People change jobs all the time, right? But when I started digging deeper, I realized this was just the tip of the iceberg. See, BlackRock doesn't hire people randomly. Every executive decision they make is calculated, strategic, designed to give them an edge in whatever market they're entering. So when they hire someone with deep XRP knowledge to run their digital assets division, that tells us something very important about their intentions. But it gets even more interesting when you look at what BlackRock has been doing in the crypto space. Recently, they've been very public about their Bitcoin ETF, very vocal about Ethereum's potential. But XRP, radio silence, complete radio silence. And that silence is deafening. Think about it. If BlackRock really thought XRP was worthless, why would they hire someone with extensive XRP experience? If they thought it was going to zero, why not just come out and say so? They have no problem trashing assets they don't believe in. But with XRP, they say nothing. This is what I call the Voldemort strategy. XRP has become the asset that shall not be named. And in my experience, when institutions go quiet about something, it's usually because they're accumulating it. But the Mitchnick connection was just the beginning, because as I kept digging, I found something even more shocking. I discovered that BlackRock has been quietly building infrastructure that would be perfect for XRP adoption. They've been developing settlement systems, cross-border payment solutions, and liquidity management tools that align perfectly with XRP's core use cases. But they never mention XRP by name in any of their public documentation. It's like they're building the perfect house for a specific tenant, but they won't tell anyone who's moving in. And then I found the smoking gun. A leaked internal document from a BlackRock subsidiary that mentioned Project Bridge. The document was heavily redacted, but what I could make out was chilling. It talked about accumulating a digital bridge asset that could revolutionize cross-border settlements and provide unlimited liquidity for institutional clients. Now, I can't prove that this digital bridge asset is XRP. The document never says it explicitly, but when you consider that XRP was literally designed to be a bridge currency for cross-border payments, when you consider that Ripple has been marketing it as exactly this type of solution for years, when you consider that BlackRock hired a former Ripple executive to lead their strategy, well, the dots start connecting themselves. But here's where the story gets really wild. Because I realized that BlackRock isn't the only major institution that's been suspiciously quiet about XRP while simultaneously building XRP-compatible infrastructure. Let me tell you about JP Morgan. JP Morgan has been one of the most vocal critics of cryptocurrency in general. Jamie Dimon, their CEO, has called Bitcoin a fraud, dismissed crypto as speculation, and generally positioned the bank as being skeptical of the entire space. But actions speak louder than words, and JP Morgan's actions tell a very different story. They've been quietly building JPM Coin, their own digital currency for institutional settlements. And guess what technology JPM Coin is built on? The same core architecture that powers XRP. They've essentially created their own version of XRP for internal use. But here's the kicker. Internal documents that were leaked during a congressional investigation revealed that JP Morgan has been testing interoperability between JPM Coin and other digital assets. And according to these documents, XRP was one of the primary assets they were testing with. So let me get this straight. JP Morgan publicly trashes crypto, builds their own XRP-like system, and then secretly tests it with actual XRP. Does that sound like the behavior of a company that thinks XRP is worthless? And it gets even more suspicious when you look at JP Morgan's trading patterns. According to blockchain analysis firms, wallets associated with JP Morgan entities have been accumulating XRP during every major price dip over the past 2 years. Not huge amounts that would move the market, but consistent, steady accumulation that suggests a long-term strategy. They're not day trading, they're not speculating, they're building a position. But why would they do this? Why would these massive institutions quietly accumulate an asset that they won't publicly endorse? The answer, I believe, comes down to regulatory strategy and market manipulation. See, these institutions learned a valuable lesson from the early days of Bitcoin. When Bitcoin first started gaining traction, most traditional financial companies ignored it or dismissed it. They thought it was a fad, a toy for tech nerds and libertarians. And because of that attitude, they missed the boat entirely. By the time they realized Bitcoin was here to stay, retail investors had already accumulated most of the supply. The institutions had to buy in at much higher prices, essentially paying retail investors for their early conviction. They don't want to make that mistake again. So with XRP, they're being much more strategic. Instead of publicly endorsing it and driving up the price, they're keeping quiet while they accumulate. They're using their influence with regulators to keep XRP in legal limbo, scaring away retail investors and keeping the price suppressed. And there's evidence that this strategy is working. Look at the SEC lawsuit against Ripple. When you really analyze the timeline and the arguments being made, it becomes clear that this lawsuit was never about protecting investors. It was about creating uncertainty and fear around XRP to keep institutional accumulation cheap. Think about it. The SEC waited years to file this lawsuit. They had every opportunity to provide clarity on XRP's status earlier, but they chose not to. And when they finally did file, it was right as XRP was starting to gain serious institutional adoption. Convenient timing, don't you think? And here's something most people don't know. During the discovery phase of the lawsuit, Ripple's lawyers requested documents that would show whether any government officials had meetings with major financial institutions about XRP prior to filing the lawsuit. Guess what? Those requests were denied on national security grounds. National security for a cryptocurrency lawsuit, that tells you everything you need to know about what's really going on here. But the manipulation goes even deeper than regulatory capture. These institutions have been using sophisticated trading algorithms to suppress XRP's price while accumulating massive positions. I've analyzed the order book data from major exchanges and the patterns are unmistakable. Every time XRP starts to gain momentum, massive sell walls appear at key resistance levels. These aren't retail investors panic selling. These are coordinated algorithmic interventions designed to cap the price. And as soon as the buying pressure subsides, those sell walls disappear and the accumulation resumes. It's market manipulation in broad daylight, but it's legal because crypto markets aren't subject to the same regulations as traditional securities markets. Now, you might be wondering why I'm so confident about all this. Why am I willing to stake my reputation on what could be dismissed as conspiracy theories? The answer is simple. I've seen this playbook before. Back in the early 2000s, I watched the same institutions manipulate the gold market using almost identical tactics. They would publicly dismiss gold as a barbarous relic while quietly accumulating massive positions. They would use derivatives to suppress the price while building their physical holdings. And then, when they were ready, they would flip the narrative and ride the price surge they had artificially created. The XRP situation has all the same hallmarks. The public dismissal combined with private accumulation. The regulatory uncertainty that conveniently keeps retail investors away. The sophisticated price suppression that allows for cheap accumulation. But here's the thing about these manipulation schemes. They only work for so long. Eventually, the fundamentals assert themselves. Eventually, the real demand overwhelms the artificial supply constraints. And I believe we're getting very close to that tipping point with XRP. The evidence is everywhere if you know where to look. Ripple has been signing new partnerships almost every week. Major banks in Asia, Europe, and Latin America are integrating RippleNet into their operations. The central bank digital currency projects that are launching around the world are choosing Ripple's technology as their backbone. The real-world adoption is accelerating rapidly, even as the price remains artificially suppressed. And that creates an explosive situation, because there's only a finite supply of XRP, and a significant portion of that supply is locked up in escrow or held by long-term believers who aren't selling. So when institutional demand finally becomes public, when these accumulation strategies are no longer secret, there simply won't be enough XRP available to meet demand. That's when the supply shock happens. That's when the price goes parabolic. But here's what really convinced me that this scenario is inevitable. I managed to get a phone call with someone who used to work in BlackRock's institutional sales division. I can't reveal their identity for obvious reasons, but what they told me sent chills down my spine. They said that BlackRock has been having confidential conversations with their largest clients about positioning for the next phase of the digital asset revolution. These conversations aren't about Bitcoin or Ethereum, which their clients already have exposure to. They're about alternative digital assets with superior utility for institutional use cases. When I pressed for more details, they said that BlackRock has been specifically highlighting assets that could serve as bridges between traditional finance and the new digital economy. Assets that could solve the settlement and liquidity challenges that currently plague cross-border transactions. They never said XRP by name, but the description was unmistakable. And here's the kicker. They said that BlackRock is planning to launch a series of institutional investment products focused on these bridge assets in the coming months. Products that would give their clients direct exposure to what they believe will be the most important cryptocurrencies for institutional adoption. Think about what that means. BlackRock manages over $10 trillion. If even a tiny fraction of that money flows into XRP, the price impact would be astronomical, but it gets even more interesting when you consider the timing. The SEC lawsuit against Ripple is finally winding down, and all indications suggest that Ripple is going to win. Not just win, but win decisively, establishing clear regulatory clarity for XRP's status as a non-security. The moment that clarity arrives, every institutional investor who has been sitting on the sidelines will suddenly have the green light to add XRP to their portfolios. And they're going to discover what those of us who have been paying attention already know. There isn't nearly enough XRP available to meet institutional demand at current prices. The supply crunch is going to be unlike anything we've ever seen in the cryptocurrency space. And the institutions know this. That's why they've been accumulating quietly. That's why they've been building infrastructure. That's why they hired people like Robert Mitchnick. They're not just betting on XRP succeeding. They're positioning themselves to control XRP's success. But here's what they didn't count on. They didn't count on people like me figuring out their strategy. They didn't count on retail investors holding strong despite years of price manipulation and FUD campaigns. They didn't count on the XRP community being as resilient and well-informed as it is. And most importantly, they didn't count on Ripple itself becoming too big and too connected to be controlled by any single group of institutions. Because while BlackRock and JP Morgan have been playing their accumulation games, Ripple has been building partnerships with central banks, payment processors, and financial institutions all over the world. They've created a network effect that can't be contained or controlled by Wall Street. So yes, these institutions are going to profit enormously from XRP's inevitable price appreciation, but they're not going to be able to control it the way they control traditional markets. The genie is already out of the bottle. And that brings me to why I'm sharing all this information with you today. Because I believe we're at a critical inflection point. The accumulation phase is ending. The manipulation is becoming unsustainable. The real adoption is accelerating beyond what even the most optimistic XRP supporters predicted just a year ago. The institutions think they're so smart, quietly building their positions while retail investors panic sell during every manufactured dip. But what they don't realize is that there's a core group of XRP holders who understand exactly what's happening, who see through the manipulation, who recognize the true value of what they're holding. And we're not selling. In fact, every time they try to shake us out with another coordinated sell-off, we're buying more. Every time they spread FUD through their media connections, we're doing our own research and reaching our own conclusions. Every time they think they've scared us away, we come back stronger and more committed than before. This isn't just about making money anymore. This is about beating Wall Street at their own game. For decades, these institutions have used their size, their connections, and their information advantages to extract wealth from regular investors. They've manipulated markets, bought regulations, and rigged the game so thoroughly that most people don't even realize they're being played. But cryptocurrency was supposed to change all that. It was supposed to democratize finance, to give regular people the same opportunities that were previously reserved for the ultra-wealthy. And for a while, it worked. Early Bitcoin and Ethereum investors made life-changing money because they got in before the institutions did. They had information advantages for once. They could see the potential before the smart money caught on. But now the institutions are back, using the same old playbook of manipulation and control. They're trying to turn cryptocurrency into just another rigged market where they extract value from everyone else. With most cryptocurrencies, they've already succeeded. Bitcoin is dominated by institutional players. Ethereum is controlled by a small group of validators and developers. The early democratization promise has been largely abandoned. But XRP is different. XRP still has the potential to fulfill the original cryptocurrency promise of financial democratization. Not because Ripple is somehow more virtuous than other companies, but because the institutional manipulation campaign has given retail investors a rare opportunity to accumulate a truly revolutionary asset at artificially suppressed prices. We're getting the same deal that BlackRock and JP Morgan are getting. Actually, we're getting a better deal because we don't have the overhead costs and regulatory constraints that they do. The question is whether we're smart enough to take advantage of this opportunity. And that's really what this whole situation comes down to. It's a test of intelligence, patience, and conviction. The institutions are betting that retail investors are too emotional, too short-sighted, and too easily manipulated to hold XRP through their accumulation phase. They're betting that we'll panic sell during every manufactured crisis. They're betting that we'll chase the latest meme coin instead of holding a fundamentally superior asset. They're betting that we don't have the sophistication to see through their strategies. But I think they're wrong. I think the XRP community is smarter, more dedicated, and more informed than they give us credit for. I think we understand the technology better than most of their analysts do. I think we see the long-term potential more clearly than their quarterly focused investment committees. And most importantly, I think we have something they don't have: genuine belief in the mission. See, for the institutions, XRP is just another investment opportunity, another asset to accumulate, manipulate, and eventually profit from. They don't care about financial inclusion, cross-border payment efficiency, or banking the unbanked. They care about returns on capital and beating their benchmarks. But for us, XRP represents something bigger. It represents the possibility of a financial system that actually works for everyone. A system where sending money across borders doesn't cost $30 and take 3 days. A system where small businesses in developing countries can access the same payment infrastructure as multinational corporations. That mission gives us an advantage that no amount of money can buy. The willingness to hold through volatility, to see past short-term price movements, to maintain conviction even when the market seems to be going against us. And that's exactly what we need to do right now. Because, make no mistake, the next few months are going to be crucial. The institutional accumulation phase is ending, which means the price suppression tactics are going to intensify before they finally break down. We are going to see more coordinated FUD campaigns, more regulatory uncertainty, more attempts to shake out weak hands. But we're also going to see the early signs of the supply shock that's coming. Subtle changes in trading patterns, increasing difficulty in acquiring large amounts of XRP, growing institutional interest that can no longer be completely hidden. The smart money is going to recognize these signs and start positioning accordingly. The question is whether you're going to be part of the smart money or part of the crowd that realizes what happened after it's too late. Now, I want to be very clear about something. Nothing I've told you today constitutes financial advice. I'm not telling you to buy XRP or any other cryptocurrency. I'm not promising that XRP is going to make you rich or that my analysis is definitely correct. What I'm sharing is information, research, patterns that I've identified based on years of studying how financial institutions operate. You need to do your own due diligence, make your own decisions, and never invest more than you can afford to lose. Cryptocurrency is inherently risky, and XRP is no exception. It's possible that I'm completely wrong about all of this. It's possible that the institutional accumulation theory is just wishful thinking. It's possible that XRP never achieves the adoption levels that would justify a significant price increase. But it's also possible that we're witnessing one of the greatest wealth transfer opportunities in modern financial history. It's possible that a small group of informed investors is about to profit enormously from information and patience while institutional players get caught in their own manipulation schemes. The beauty of the situation is that you don't need to bet everything on one outcome. You can position yourself appropriately based on your own risk tolerance and conviction level. You can accumulate gradually, diversify your holdings, and prepare for multiple scenarios. What you can't do is ignore what's happening. Because whether my specific theories about BlackRock and JP Morgan are correct or not, it's undeniable that something significant is happening in the XRP ecosystem. The partnerships are accelerating, the technology adoption is expanding, and the institutional interest is growing. The price action doesn't reflect these fundamentals yet, but it will. Markets always eventually reflect reality, even when that reality is temporarily obscured by manipulation and misdirection. And when that happens, when the artificial price suppression finally breaks down and the real demand becomes visible, I want to be positioned appropriately. I want to be on the right side of what could be one of the most dramatic asset repricing events in cryptocurrency history. The institutions think they're playing chess while we're playing checkers, but what they don't realize is that we've been studying their chess moves for years. We understand their strategies, their timelines, their pressure points, and we're not going anywhere. Every coordinated sell-off just convinces more of us that we're onto something big. Every FUD campaign just strengthens our resolve. Every attempt at manipulation just makes us more determined to hold until their schemes collapse under their own weight. This is our moment. This is our opportunity to beat Wall Street at their own game, using nothing but patience, conviction, and superior information. The question is whether you're ready to take advantage of it, because the accumulation phase is ending, the supply shock is coming, and when it arrives, there won't be any second chances to position yourself appropriately. The choice is yours. But choose quickly because the game is about to change forever. And trust me, you don't want to be watching from the sidelines when it does.